welcome to YouTube channel. It's another day, it's another breakdown video. So today's video, I'm going to be talking about like time trading and how relevant it is to your trading. So please, before I get into the breakdown, if you haven't subscribed, please do subscribe now so that you can get the video content as soon as I release it, and then also help like and share so that the channel gets more reach to other people. So yeah, with that being said, I'm going to jump right straight into the video. Okay, so what do I mean by time trading? First of all, time means volatility. A lot of traders be like, time trading is like risky or somewhat not the best time to trade. But actually, time trading is like an indicator for me that I used to check my trades out before I actually execute. So we see the Forex Factory, we see the news calendar, and usually when we see high impact news, red folder news, that's when we like to get involved. I also use this time to tell us what time it is to trade, because like you can see on a Monday there is no news, so we can expect some less amount of volatility and we can expect some choppiness in the candles. So like for example, let me go to the XY. On Monday there wasn't any news, so we didn't really see any sort of volatility, but later during the week we had some news, and that was when the volatility came into the market, which was around Wednesday to Thursday. We can see on Wednesday we had CPI. This was Wednesday candle. We can expect some actual high amount of volatility and peak volatility to actually give the movement we want to see. We don't want to trade when price action is choppy or when the market conditions are not at best point in time, because we could easily get liquidated and then stopped out and lose money when we actually know imagine like getting your analysis right, and then just because you weren't patient enough for time or news to come out, then you get stopped out before the original entry or before the original move makes or comes to play. So now I'm going to break down my GJ trade. So right here on the monthly time frame, now nothing really clear for us to see except we mark out this level here and this level, and as well this previous month's high and previous month's low. So those are the major points of liquidity we can see to take before we continue to the external liquidities. So now the weekly time frame, I move down to the weekly time frame, and what can I see now? The weekly time frame is where I can actually refine. We can see we try to actually push higher from this fair value gaps. We created fair value gaps, but this fair value gaps got disrespected by creating a new fair value gap lower. So I was actually bearish on GJ. I was quite bearish on GJ for some time. So this was it. This was like the bullish order flow. So we're expecting bullish continuation. Will price fail to continue higher above these levels and actually start continuing low to the daily time frame. So this was the daily time frame I was actually looking at. When we are looking for lower prices, we are expecting short-term highs. This is a short-term high right here, short-term high right here. These are short-term highs. This is a short-term high. This is another short-term high. So when we're quite bearish, short-term highs get respected, they stay respected, so we reach an intermediate term low. And then an intermediate term low, as I said in my last video, is a low that has a higher low to the left of it and a higher low to the right of it. The intermediate term low has this low right here to the left and also a low right here to the right of it. This is basically how it works. Okay, our context low, because we are creating, we know that price moves from one PDRA to the other. When we look at our economic calendar, what does it say? This was on Monday, and as you can see on Monday there wasn't any news. You don't expect the volatility to peak in and then to see this was on Monday, candle creating on Monday, expecting bearish price action. So as you can see, this is the daily fair value gap we are looking for. Okay, look at this green candle right here. So if we go down to the 1 hour time frame, yes, this was daily time frame fair value gap we're looking to continue shorts from. So why do you think, once you see bullish fair value gaps entering into the leg, to bearish fair value gaps exiting the leg, you can look for your entry right here, take your stops right here, and then close short-term high and then target 122. Why do you think you would have probably gotten stopped out only for the news, for the actual move to play out after you hit your stop loss? Why? Because time wasn't in alignment with that. You see, this price action now was on Tuesday, actually before the news was released around what time? 7:30. So we knew that this wasn't the actual move the price wanted to give out. If we waited, this was on Tuesday price action. This was Tuesday. If we look at it on Tuesday, we had no GBPG or JPY trade, any red folder news on Tuesday. If you pay attention to this, so all this on Tuesday was purely just fake price action accumulation, trying to stop you out. Now, this, why do you see this fair value gap wasn't respected and continued? If you looked at it, you could probably, if you were looking for a 1 hour trade, you probably have entered here and then got stopped out in this whole brick of consolidation. But if you were patient enough to wait for when it was time for USD news, I mean for GBP news, this was Wednesday, the GBP news came out right here. I'm gonna use my horizontal line to my vertical line. This was when the news came out. There, about here, somewhere around here. So when the news came out, this was the original movement. This is the actual movement of price. You probably would have waited, if especially most times I would have waited, because this happened after like this was like Frankfurt session. So you probably should have waited for the actual move after the news, not before the news, because GBP's news came out 1 a.m. which we had CPI of GBP. You don't want to trade before the CPI result is released. You trade afterwards. Now we can see we created fair value gaps coming lower. We created fair value gaps coming lower. And look at another way you could have gotten manipulated, by trading just in the news session. This would have been like, look for a confirmation on a lower time frame. If you come here and wait for confirmation, that's why we want to trade at the right time in our trading. Now look at this setup. We have this fair value gaps. If you entered here after the news session came in, we look at this retracement into this fair value gap, then created a new fair value gap lower. You would have looked for an entry from here, which look at the original push you were looking for. Entered here, stops above here, and hit your take profit. So basically, you have to know the right time to trade. Trading before the news. Now look at this. If you entered here, you probably have gotten stopped out just before you got anything done. If you entered from here, so you had your stops here, somewhere around here, and then you take profits 1 to 2 right here, you have gotten stopped out before your trade even hits TP. But look at this choppy price action. Even if you go on the 1 minute time frame or the 5 minute time frame to look for trades around here, you probably as well still see some choppy price action, which you don't want. Look at this amount of choppiness. This was the initial move and plunge into it, consolidation, and then this is the original move. We could have actually capitalized on this move by just being patient enough for price, waiting for time to align with price. It's very important to your trade in your trading journey, because like if we had our trade right here, had our trade entry from this follow through fair value gap stops, you could have as well had your stops like 50% of the fair value area, or see short-term highs. If you go on the 15 minutes, look for your entry from this 1 hour fair value gap as well. You could have as well gone to 15-minute time frame to look for new entries of this fair value area and fair value gap here, this 1 hour fair value gap. So this would have been your entry from this fair value area being created right here, because it's turning into this fair value gap right here. It's turning into it, created new order flow. This would have been your entry. This would have been a breakaway gap. Have your entries here. and target your 1 to 2. Imagine how quick this happened. Imagine how quick this happened rather than waiting and waiting and waiting for some choppy price action right over here and getting stopped out.